Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. As you can tell, I might be a little more tan, a little more relaxed today in my collared shirt here, and that's because I'm through the wonders of technology, broadcasting live from San Juan, Puerto Rico, here in our bi-weekly Markets in Focus session. So still wanted to share some updates here. Maybe just a little more relaxed, a little more tan version of Markets in Focus here this week. But nevertheless, high inflation in October, our first topic. We just got the October print here this week. If you look at small caps, they have been trading sideways for the better part of 9 months, finally breaking out in early November. A little bit of volatility here the past few days, but the breakout remains nevertheless. And the S&P 500, not to be overshadowed, number 2 on the list of stock market calendar years that have made all-time highs. So the second most all-time highs made in a calendar year, highest amount since the 90s. We'll talk about that a little bit as well. So if we look at inflation coming in on a month-over-month basis of 0.6%, and if you look at it on a year-over-year basis of 4.6%, a little bit higher than expected. And if you look underneath the surface, those U.S. rent prices, which were remaining quite low about 6 months ago when home prices were surging, they are starting to pick up, and that's starting to cause inflation to remain elevated. The other big component of this is those bottlenecks, those supply chain bottlenecks. Those typically take 6 to 12 months to work themselves through the economy when we're talking historically about sort of external shocks like natural disasters or in this case, COVID, sort of non-financial market issues when it comes to the economy. But nevertheless, high inflation remains high, and I think we're going to need to see those supply chains start to be working a little more smoothly before we start to see this return to normal. Now, if we look at the Russell 2000 small cap index, this is the price chart here, breaking out to a new all-time high after months. If you look on the chart all the way back to February, from February through early November, this index, the price of this index literally did nothing. And at the same time, the S&P 500 was obviously sort of slowly grinding higher, did experience that 5% pullback there in late September, but for the most part, just slowly grinding higher. And we saw that market breadth was really, really weak during the summer months, and partly due to this chart where it just was not doing anything. Well, that's starting to correct itself here. We've seen the small cap index participate in a big way, and it's resolving this trading range to the upside, which again was the optimistic part of that concern that we've had in market breadth, is that this could resolve itself, and it's starting to show that perhaps it is going to resolve itself, and it's in the latter stages of doing that, if you will. And so one of the things that we're looking for is not only the broad participation from small packs, but obviously mid caps and large caps. And if you look at advanced decline lines or percentage of stocks above the 50-day moving averages, those are starting to improve as well. So all in all, a very positive thing for the U.S. equity market with small caps breaking out here. But not to overshadow the S&P 500, like I talked about, they've been the real leader for most of the year. If you look at this chart here, 65 days, the S&P 500 has made a new high during the calendar year of 2021. And why is that significant? That's the second highest number of new highs in a calendar year since the 1990s. And in fact, it's the second highest throughout the entire history of the S&P 500 going back to 1950. So I think when we look back, we still got a little time. So perhaps this record could be broken, but whether it is or not, I think 2021 is going to go down. So far, we've only had 5% pullback, still some time left in the year, but will go down as one of those years that was really low volatility and extremely strong momentum. And that's been the case from a historical perspective for the S&P 500 during this year. And finally, as I said, I'm coming to you from San Juan, Puerto Rico. I want to talk a little bit about the trip. It was a great family vacation. We got a picture of my son, Henry, there, my wife, myself and my son visiting the country and city of San Juan. I just recommend anybody who's not been here. It's a beautiful country. In the month of November here, the tail end of rainy season, we were very fortunate, high 80s the entire time, barely any rain, but you have city life, old San Juan, built by the Spaniards back 500 years ago. So a little bit of a European feel. If you go around, get a rental car, you've got rainforest, mountains, beautiful beaches. People are very, very friendly. If you don't travel internationally as much, you don't need a passport because this is a U.S. territory. And also language barrier. Knowing Spanish does help, but if you don't, most people here do speak English. So all in all, a great trip, and I would recommend everyone getting out here and supporting Puerto Rico. As remember, they are still recovering from the hurricanes, which they typically get every year, but the big one was Maria a few years ago. So with that, I want to thank everyone for watching, and I will see you next time.